Good evening. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who actively take positions in US, Europe, and Asia. But like I said many a times, our fund is a proprietary fund, which precisely means that no third party, whether you are a venture capitalist, you are a private equity, or probably even a hedge fund, you cannot invest capital in our fund. Guys, the world of finance is basically divided into two parts. Number one is the buy side player, number two is the sell side player. Buy side players are those players, those who issue the securities. Example, corporates, municipals, banks, financial institutions, and sometimes governments. They are buy side players. They issue security. Sell side players are those who actively participate in selling of that security. In the sense like investment banks are helping a company to issue security and then sell it to the, I would say, to the retail investors or to the other hedge fund, probably the family offices and XYZ. The bookish definition is that the investment bankers are sell side players because they do advisory. So example, if Microsoft is is issuing some security, then assuming Goldman Sachs would be helping Microsoft to sell this security to the retail investors, probably family offices, hedge funds, or maybe XYZ. This is what the bookish definition of the investment bankers, but let me confirm you that this bookish definition is not correct, because all investment bankers of the globe, they have one more desk. And what are they? They are called prop desk. For example, you're a top investment bank of the globe. You make money. What do you do with the money? Okay, your office expenses, your salaries, the bonuses, whatever, XYZ. After that, you're left with some money on a year basis. What do you think? These investment banks deposit the money to the mutual funds who are giving 1% return? Or probably are they, I would say, are they investing in FDs who are giving 1% return? No. Their prop desk convert themselves as a buy side player. They buy securities from the market. Now, this buy side would have a separate meaning. So, example, let's change the example. Microsoft is issuing 2 billion worth of bonds. Microsoft is an issuer. Suppose Goldman Sachs is helping Microsoft to issue 2 billion. In that regards, Goldman Sachs is in touch with the various hedge funds, probably venture capitalists and all, to take this security. So Goldman Sachs is a sell side, but there is one desk of Goldman Sachs who actively participate in buying these bonds. They believe Microsoft is a AAA entity. It's a cash-rich company into the good business of technology, cloud service, product, and whatnot. So why not buy these bonds and hold for 3 stages? I'll come to 3 stages. This is what I would like to convey. So guys, when you wanted to make your career in investment banking, one thing you are supposed to be very clear. I repeat, when you wanted to work in investment banking, one thing you are supposed to be very clear is that are you working in a sell side part, which means advisory, helping clients to issue money, or you wanted to work the proprietary positions of the investment bank. I completely agree without quoting any specific name. The investment bankers never share their proprietary positions in the public. Never share. Hardly share. But the market is also completely agree with the fact that they do have prop positions. And I'll tell you something. Again, I take a hypothetical example. I repeat this, a hypothetical example. Suppose Microsoft is doing FPO, follow-on public offer. Microsoft is already listed, so next is the FPO, follow-on public offer. And suppose Goldman Sachs is helping Microsoft to get the fund raised. But Goldman Sachs do some trick. And what the hell is trick? They say my fees is 0.25%. Suppose that fees turns out to be 10 million, assuming. Goldman Sachs say, don't give me 10 million, right, in cash. Give me 50% in cash and rest 50%, 5 million. I want your stock. There is a catch. The 5 million cash which I am getting, this is by my US entity, and rest 5 million is by my proprietary fund who actively doing the buy side trading. And that's the beauty. And that is the beauty. Because Goldman believe that they get Microsoft at the cheapest price. Probably 15, 20, 30% lesser than the market rate. And Goldman believe that if they're going to be holding the Microsoft for 1 year, which is called buy and hold approach, of course, that depends upon intrinsic value, that's more important. In this eventuality, Goldman would get a substantial profit. Probably 20%, 25%, maybe 30%, maybe more, God knows. So guys, one thing you need to understand, the way Goldman is there in the public, they are a sell side player, predominantly. They are buy side also. This is just an example. Investment banks have buy side and sell side. They have their prop positions. And they make good money out of prop positions. So if you wanted to be a player, I would repeat, if you wanted to be a player in the world of investment banking, then first of all, you have to be clearly, I would say very, very clear in your mind that, guys, am I looking to be the sell side part of the Goldman Sachs? And I'm looking to be the prop part or the buy part of the Goldman Sachs. This clarification is mandatory. By the way, the second piece is really, really tough. Like I promised, our investment banking desk is on, videos are coming, and a lot of things on the card. This is Rahul Magan from Proprietary Consulting Group. You knew my personal number, 9899242978. Have a great time ahead.